welcome to the video number 4 of the cryptocurrency course. Like we said, we're going to go over the different types of orders that you can execute in the market. So the one that is not listed is simply a market execution, which means buy or sell right now. All right, so that's a basic entry. So now we're going to get into the pending orders. We all can plan trades in advance. So for example, if I see a big zone of consolidation and I place a rectangle on it, I will not wait day and night until it breaks higher or it breaks lower. So I will opt for pending orders, which are orders that you set in advance and that are basically conditions for the market. So only if price goes to the price level you said in the order, it's not going to open an order until it goes there. All right, so for example, you would like to buy a certain coin, but not at the price it is right now, because you feel like the price is too high and it should retrace. For example, this could be a Fibonacci level, okay, where you do not want to buy high, so you will simply wait until if the price goes back, retraces back to a Fibonacci level, and you can place a pending buy order there. So the pending buy order that fits this situation is what we call a buy limit. So a buy limit is when you place a buy limit order, your entry is basically below the price, okay? It's below where the price currently is. So when price hits your order, okay, your pending buy order, your buy limit, you will be automatically entered into a buy, okay? So in this case, if you are waiting for a retest of a trend line or a support and resistance, and you suspect that this could be a good buy, but that could happen while you're sleeping, while you're working, while you're busy with other things, the pending buy orders and the pending orders in general will help us as retail traders to catch trades that we normally couldn't catch if we didn't have the pendings. The second pending buy order is what we call a buy stop. So you're placing your entry price above the actual price. So you're basically wanting to buy, but not at the current price. You want the price to be higher, okay? Let's take, for example, that you had a rectangle over here, okay, from previous price, and you would like to buy only if it breaks higher. But let's say you see that and you are here, and then you go for work or you go for sleep, you go do something else, and you cannot stay in front of the chart forever. So by placing a buy stop, if the price goes and breaks higher, you will be entered into a buy. But if it doesn't go higher to this price and it simply does this, you are not engaged into anything. So you are not losing, you're basically not in a trade, okay? And you can simply delete that pending order later when you realize that maybe it's not going to go to the upside for a certain period of time. So this is for the buy side. For the sell side right now, we have a sell limit. So when you place that type of order, your entry price is above where the price is currently. And if it hits that price, it's going to engage you into a sale right away. Okay, so for example, okay, I'll take my pen. You have a big resistance on this spot, okay, because you're looking at previous price and previous price tested like this, and you have placed a horizontal line telling you there's a support or resistance at this point. Okay, in this case, resistance. So by placing this line, you maybe want to sell if it hits another time, and maybe you cannot be there to watch it actively. So by putting a sell limit, it's going to engage you in that sale without you being there. And same example for all pending orders. If it does not hit that level, you are not engaged into any trades. Okay, so this is how you can take advantage of the pending orders. The sell stop now, you're placing your entry below the actual price. So when it hits, it engages you in a sale from there. Okay, so let's take an example. You have a rectangle right here. Price seems to be constricted inside of this, and then suddenly it breaks. Okay, you might not be there when it breaks, but if you see the rectangle right in time, you can place your pending and take a sell on this automatically. Okay, and same thing, if it doesn't go to that price and it continues up, you are not engaged into any trades. Okay, so this is how you take pending orders, and that's going to be very useful, especially because you now realize that for the breakouts, you will realize that you won't be there every time and you will miss breakouts. However, with the help of pending orders, which are orders you can set in advance with specific parameters, it will help you to catch trades that you normally wouldn't be able to catch. Okay, so quite simple and straightforward for the pending orders. What I'm going to show you during the next video is how to store and acquire coins. All right, so see you in the next video.